The first question is a really basic one, and I think it's basic but hard. Is there's talk about private sector investment. What's your feeling about what private sector is asking for a rate of return for this type of investing? Anybody?
I'll take a stab at it. Actually, public-private partnerships, you have a lot of private water systems out there across the state, and they're actually charging for the cost of the water. That's one thing that the General Assembly has been trying to get these cities and across the state to do, is actually charge for the actual cost of it. So a lot of times the private is already ahead of where we think it needs to be, and you need to pay for what the actual cost is. So I think it's probably a good thing.
I can speak to that, adding to Mitch's comments, but from a different angle, which is really around banks and environmental finance and whether we ought to be giving discounts for environmental projects. We get this question a lot, and I think the way that I think about it, and I think the way that many banks think about it, is that if you really want to take environmental finance and make it competitive and make it mainstream and incentivize banks to do as much of it as possible, then you actually want it to meet the same hurdles, you want it to meet the same criteria, you want it to meet the same risk criteria as all of your other transactions. So I think for me, and coming to this from the standpoint of understanding the different environmental and social concerns and being very dedicated to solving them, I think we really want, for environmental finance, social finance, we want it to hit the same returns as regular finance, because that's how we're going to get to the herd that Alfred showed in his slide.
So I'll just provide a slightly different perspective. So we do a lot of work with the Conference of Mayors and have a lot of conversation with mayors across the country about water and sewer infrastructure, and the biggest issue for them is affordability. So when I think about sort of the finance and instruments out there and the cost of water and the cost of wastewater, I do recognize some of the concerns, some of the limitations to get in private funds, to enable some of those transactions to move ahead. But the bottom line, I think the point I would want to make here, there needs to be a balance. I think, for a very long time, water has probably been, water is affordable, probably too affordable in some cases. But the bottom line is you cannot transition from jumping from maybe 1% of your MHI to 10%. So there has to be a balance. And in many cases, we find, when you have these incredible jump, it creates a really regressive issue for many of these communities. So there needs to be a balance in how we address water rates across the board, if you will. But we do need to figure out ways to engage private transactions in water and sewer infrastructure.
And I'll just add on to that. 2 points there. So in the work that water.org does with microfinance institutions, we initially encourage those institutions to provide financing to their customers at a rate that is relatively close or similar to what they're providing for other types of loans. And one of the main reasons we do that is because long term we want this to be a sustainable investment on their part. And to do that, they have to meet their costs. Now, we do have some partners that cross-subsidize their investments with higher interest rates, for example, on income-generating activities. But part of our effort is to make sure that we're making the business case to them that they see value in incorporating that into their business and into their operations. So we actually do encourage them to charge at a rate that's similar to what they're providing for other products. I think in the case of vanilla water that I mentioned, I think one of the ways that they were able to leverage private investment was to demonstrate that there could be cost savings on the operations side that would allow them to make debt and equity investments that were attractive to private sector investors. And to some extent, they were able to cross-subsidize that with funding from, for example, the government bank in the Philippines, as well as the World Bank and the IFC, which also provide public investments, but do so at a typically more nominal rate of return.
I have nothing to add.
All right. This next remark is more of a comment, I think, than a question, but if certainly anyone has any ideas, we'd love to hear it. And it's something that we've actually tracked as well. There was a lot of mention about this so-called movement to distributed technologies. We talked about a cistern in the first session. Andrew, you talked a lot about green infrastructure. One of the people in the audience had a concern that the uptake for that type of distributed infrastructure is occurring at higher income levels. So the people putting solar installations on their roofs tend to be middle and upper class. The same with water cisterns. There was a concern that that is going to shift the percentage of what we ask low-income citizens that don't have the wherewithal to make those distributed investments. They're going to be left holding a bigger piece of the pie afterwards. So if half of your wealthier citizens take care of their own needs and what's left is lower income that couldn't afford that. So I think it's more of a comment, but I would be curious if anybody is addressing that issue in their programs or have any insight on that, or is that a real issue?
I'll start from our point of view. I think one of the things that we've been able to do with our water credit initiative is to help segment the market in terms of water and sanitation improvements at the household level and at the community level. I think in the past there's been historically, water and sanitation sector has tended to view people as much the same. Either everybody deserves a subsidy, but there's not enough public money available, so the people who really deserve a subsidy don't get it, or everybody deserves some degree of subsidy, but that subsidy gets translated in terms of the tariffs that people pay. So the middle and upper income people are the ones that benefit most from those subsidies because they're connected to the water and the sewer systems in the first place. And so what we've been trying to do with water credit, but also with our direct impact work, is to sort of segment the market so that with water credit, we realize that we're not targeting every single customer. There's going to be people at the absolute base of the pyramid that probably can't afford financing under any terms. And those are the people that really need subsidies to connect to the water system, like I showed with the World Bank output-based aid example. And so for us, it's really sort of targeting subsidies to where they're best appropriate, where they can be leveraged to go to greater degrees of scale, and having that sort of market segmentation process built into a sector that frankly has been fairly resistant to that.
So I'll briefly address that, and I'm smiling about sort of targeting the subsidy because when I was a member of EFAB, and several folks in this room, including Jeff, Stan, and Karen, actually worked on this project. One of the things we arrived at, we did a lot of work around affordability, and we typically talk about affordability as a community issue. And so in the context, we're thinking perhaps in certain communities won't benefit from green infrastructure. And just to that issue, I actually see a lot of disenfranchised, minority, low-income communities actually benefiting from green infrastructure. But the point I want to make about targeting financing or targeting subsidy, we actually got to the point where I think there was an agreement, a sort of broad conclusion that affordability is more of a household issue than a community issue. And I think there are instruments around for us to identify how best to target those resources to those who need it most. And I still stick by that affordability is a community issue a household issue rather than a community issue.
I can speak a little bit on the electric utility side of the equation. I think it's a legitimate concern, largely because rarely do people pull off the grid. So someone who installs solar panels or significant efficiency improvements, they are still relying upon the grid for backup power, and there should be a price to pay for that. And we haven't figured exactly what that price ought to be. And so I think there are a legitimate set of questions. I would say that we are a long way from being in a place where that is a pressing question. I mean, it's an infinitesimally small number of folks right now who are in that position. And we have some time to figure out how to do it right.
From Diener's perspective, as far as targeting lower incomes or how upper incomes are affected, I see two things. I mentioned earlier that General Assembly did tell us to target the Tier 1 and Tier 2 counties, which are the poorest counties, because if you've got a small town in eastern North Carolina of rich lands with 600 people, or a small mountain community in Bakersville, western North Carolina with 350, and they have drastic water needs or sewer needs, and you need a $2 million or $5 million upgrade to their system, there's no way that they have the tax base to pay for that. So what's your options? Your options are either let them continue to pollute the streams that are up there, or fund them because nobody else is there to fund them. But then on the other side of the coin, as far as policy directions benefiting the upper income, I see that our Deaner's perspectives now on trying to promote water reuse actually helps the more urbanized areas, because you have the population there that you can afford to run the gray water lines, because there is a market for this water reuse if we put the policies in place to make it easier for that to be done and stop the hurdles that are in the place. So they're getting the benefits from the water reuse so that they can get cheaper water as far as industrial use or irrigation. So it's both, it can help and hurt both sides on issues and policies.
Great. Well, we just have a few minutes left, and we got lots of interesting questions in front of me. But like I said, we're in the question answering business. So if we don't get it today, we're keep at it. But I think one very specific question, maybe just a few comments anyone has, is how do you pay for things that don't have an individual benefit, like statewide water planning was an example, or regulation was an example? Anyone have? I don't know if there are investors that you deal with, Val, that want to invest in a regulatory program. So any quick comments about that, and then I think we'll probably wrap it up.
Well, just quickly, I mean, I think going back to some of the things that I've seen, I'll use Maryland as an example. Maryland has significant nutrient issues affecting the Chesapeake Bay, and certainly other states are a part of the Chesapeake Bay and contribute to the concerns there. But what Maryland actually did, they put in place what is called the Bay Restoration Fund. And the Bay Restoration Fund, at this point in time, each citizen actually pays $60 a year, generates close to $70 million, and they actually leverage those funds, and it provides remediation or treatment for major wastewater treatment plants and also septic systems. But since then, they also went through this effort where the 10 major counties actually have to implement what are called stormwater or MS4 utilities, if you will. And each municipality has at their discretion how to set the revenues to address the stormwater concerns. And when I talked about Prince George's County, they're actually using that mechanism to do that. And then there are several other states across the country that are putting these stormwater utilities to address that public issue that you're talking about. And in some instances, it's actually used to support bond issuance and getting public and private capital to engage these transactions.
I think I'll refer back to Lynn's presentation. I mean, one of the reasons, the ways that you pay is you create a citizen demand for that regulation or need. So I think the nonprofit sector plays a significant role there. It's a matter of educating folks about stuff that's not necessarily immediately apparent, and reaching out and building a consensus.
Great. Well, I think when you can end a forum on the word consensus, that's probably like one of those good luck words to end on. We are at the time we've held you. You've been running the marathon for a long time. I want to thank again our dean, Dean Smith, and the School of Government for hosting this, and for our incredible group of speakers that took time away from their job at trying to figure out the answers to these challenges to come share their ideas with us. So again, thank you very, very much.